Could today's successful bond auction put back any Spanish bailout? The ECB's aggressive new bond buying plan making itself felt as Madrid passes an important test of investor sentiment, but the Draghi effect not yet impacting on the real economy. For the Eurozone as a whole, September's PMI surveys show the slowdown grinds on. Let's hear from Norbert Aul, European rate strategist, RBC Capital Markets. Norbert, let's start with the Spanish auction. We're at 578 on the 10-year now. How long is this bounce likely to last?
Well, hello, first of all. It definitely depends on the way the Spanish government will treat any kind of negotiations, and also the pace in terms of requesting at least a precautionary credit line, how much time that will take, and how much haggling rounds between the Spanish government and the Eurogroup will be forthcoming. Like, from that perspective, this is clearly comes down to a political issue.
Is Spain further away from a rescue now than it was yesterday at this time?
I wouldn't necessarily say so. Like, from the perspective, of course, if the auction would have gone very bad, this would have accelerated the entire process in terms of requesting precautionary aid. But like, what we are talking about here is not a full-blown bailout program. What the market wants to see is Spain asking for a precautionary credit line. So this would already, the conditionality attached to that would already make it possible for the ECB, under their own discretion, to intervene in the bond markets, as the ECB has outlined up to 3 years. And the precautionary credit line does not necessarily entail that Spain will actually have to draw on those funds. So if the sentiment is well enough, then we might well see the program, but not actually the program coming to action.
And that's enough for the markets?
Well, it really depends on then the political progress there. So this is all these measures. They are just buying time for Spain, giving Spain the time to implement further fiscal consolidation and further austerity measures in terms of getting back on a sustainable track. From an economical point of view, to regain the trust not only from domestic investors but also from international investors, and also normalize their funding pattern, which has been highly tilted towards the shorter end of the curve, especially to the 2-3 year sectors over the past months. And this is something to maintain a sustainable debt stock in terms of maturity. Also, Spain will have to go in more sizable issues back to the longer end of the yield curve.
Why, Norbert, why has the ECB's promise not helped lift business confidence across Europe?
Well, I think if you look at the stock market, and also if you look at generally risky assets, I would still definitely say that we have an improvement there that does not necessarily reflect right away in the data, given the fact that there are still huge uncertainties around. But the market development over the past 6 to 8 weeks has definitely been positive in terms for more risky assets.
So you think we'll see that positive reflection in the next set of PMIs? Do you?
That could well be, but from that perspective, I would definitely underline that the longer-term view has to be more cautious on that. While we see a near-term, while we could see a good progress in near-term and risky assets, longer-term view definitely has to see more from political perspective, especially from Spain, and also in terms of general European integration from the entire euro area.
And the fact that it's so soon after this ECB promise, or this Draghi promise, you think that rules out a cut from the ECB next month in a reaction to these PMIs?
Our general view is that we don't see another cut in the refi rate or the depot rate over the coming months. What the ECB will do from that perspective, they will have to closely consider how they want to handle a potential rate cut. Either they would tighten the corridor between the refi and the depot rate, which would have an effect on the banking sector, or put even the depot rate, which is currently at 0%, into negative territory, which would also be a strong statement by the ECB, with the implications not necessarily being positive.
All right, Norbert, thanks a lot for talking with us.
Thank you.
Norbert Aul from RBC Capital Markets. Elsewhere, European shares under pressure after today's gloomy Eurozone surveys, and an earlier HSBC PMI report showing manufacturing in China shrinking for the 11th consecutive month. Oil also hit by the China story, and Saudi's pledge to keep prices down. Brent crude sinking to its lowest level in 6 weeks. That's it for now. There's more on Reuters.com and the Insider platform. Find Market Pulse every weekday at noon London time for a snapshot of what's moving on financial markets and why. I'm Axel Threlfall. This is Reuters.